This week we're going to highlight the latest crop condition ratings from the USDA, also take a look at the short-term weather forecast, and wrap things up looking at ongoing weak export demand for U.S. soybeans. Hi, this is Brian Basting with Advanced Trading. Let's talk about the soybean market. We've moved into the middle of June here, and this market remains exceptionally volatile. Let's start out this week looking at the latest update on crop condition ratings. Now we're looking here at our usual map here. Decline nationwide from 62% good to excellent to 59%, 70% last year. Those states in red, of course, deteriorated from last week. Improvement in the green states and unchanged in the yellow. You can see that the only states that improved were down in Arkansas, Texas, as well as South Dakota. Otherwise, unchanged in Louisiana and deterioration amongst the other states. Let's now take a look at our recent history of the crop condition index. Again, we're looking at a deterioration this week. This year is well below last year, depicted in that red line. And the only years it's been above at this level are 2019. So the market has taken note of that with a rebound in soybean futures. Let's switch gears now and focus on past precip. Specifically, we're going to look at the last 30 days of precip across the U.S. Our slides this week, as usual, are courtesy of T-storm weather. Now we're looking here at a proxy for subsoil moisture. Those states, of course, in the red, the darker red is intensely dry. A lot of those states, particularly east of the Mississippi River, are struggling right now with some moisture. The states that have improved, however, are out west, parts of Nebraska as well as Kansas, Colorado. Let's now quantify the short-term forecast. We're starting out here looking at Wednesday and Thursday of this week. Looking at that area in the eastern Corn Belt, you can see that circulation is still in play here as we tape on Tuesday. It'll probably move out sometime on Wednesday. We got some moisture also in the southern areas, those areas we highlighted a moment ago that have improved. Now let's look ahead to this weekend, Thursday through Sunday. A very important system moving through here. Those areas in green are 4/10 to 8/10 of an inch, and down south in the pink is the best chance for an inch. Why is this important? There's a holiday weekend coming up. June 19th is a holiday. June 19th is looking at a 3-day holiday weekend. Therefore, the trade will cease on Friday at 1:20 p.m. Central Time and won't begin again until Monday night at 7 p.m. So we strongly encourage you to work closely with your trusted risk management advisor to have your risk management positions in place prior to this 3-day holiday weekend. Now let's quantify the next 2 weeks here. We're looking at a lot of areas in that light yellow area are close to normal. Let's quantify that now looking at a chart. Now this chart shows that about nearly 2/3 of the beans here are going to be near normal precip over the next 2 weeks. So again, we don't make a bean crop in the middle of June, but we certainly would welcome that type of precip. Let's switch gears now and focus on export trends. Let's take a look at unshipped U.S. soybean exports. Now we're looking here at a very weak total. Notice a year ago that surge in business was linked to the smaller than expected Brazilian crop. This year, however, a record Brazil crop has pressed sales to a 9-year low. And here's the important message. ATI believes the USDA is still too optimistic at 2 billion bushel. In fact, we're at 1.935 billion bushels, or 65 million bushels below the USDA forecast. Let's wrap things up this week looking at trends in November soybean futures. Now, November beans, as we tape here on Tuesday, are trading near $12.40 a bushel. That's a decent rebound from those prices we saw in May, obviously well below last year, but still a good rebound from where we've seen a month ago. Strongly encourage you to work closely with your trusted risk management advisor to defend your balance sheet. Now, if you'd like more information, please feel free to contact us at 800-664-2321. We'll put you in contact with one of our risk management consultants who'll be happy to visit with you at your convenience. And remember, we upload every Wednesday. Make sure to subscribe to our channel to never miss an upload. Thanks a lot. Have a good week.